Okay, so we are at the end of what we call financial assets. There are just a couple of things that I want to cover in this section, which is on alternative investments. So these are things like hedge funds, private equity, venture capital, crowdfunding, real estate, coins, collectibles, art, etc. Those kind of assets. Now, not all of them are financial assets, but some of them are, and we'll see how to invest in them. So now, obviously, you have to be a fairly high net worth individual to be involved in these things. So we're not saying that you're going to run a hedge fund. That's not what we're saying. Or we're not saying you're going to run a private equity company or a venture capital company. However, these entities need money from somewhere. So the hedge fund needs capital to do whatever they are doing. Private equity, they invest in other companies. So hedge funds, you have various types. You have long-term investment types. Then you have swing trading where they do a fairly active management. Then you have even sort of much more active on a daily basis. You'll have hedge funds working there. You'll have hedge funds focused on some kind of international exposure. You'll have hedge funds focused on bonds, commodities, whatever it is. There's hedge funds in every asset class. They all usually have something that is proprietary. What makes them different is some kind of a strategy, some kind of an algorithm. This would have been quantified properly and even coded in many instances so that these algorithms just run automatically. And whenever those algorithms patterns are identified, the trade also gets kicked off automatically. So you have a lot of these automated algorithms that have come up, and these algorithms are based on this whatever proprietary strategy the hedge fund uses. So that's becoming a lot more popular because all the machines and everything are becoming powerful. So now you can do a whole set of calculations in very little time. And you've probably heard of high frequency traders. They do the same thing. They have some kind of an algorithm. They jump in front of the others because they have fast computers. They're located right next to the exchanges. But we are talking of investing into a hedge fund. So if you were a high net worth person, and in general, hedge funds may have some minimum amounts, 50,000, 100,000 or more. And if you wanted to invest into hedge funds, or if you wanted to invest into private equity or into venture capital, how would you do it is what we are talking about here. It's not that we want you to become a venture capitalist or start your own hedge fund. Obviously, all of these requires funds that you do not want to touch for many, many years because private equity in general, if you invest into a private equity fund, then that fund gets invested into companies. And so those are long-term investments, 5 to 10 years. And in fact, the private equity company may even take an active management role in those companies. And so your money is locked up. And same thing with venture capital. Venture capital also, they require you to invest for 10 years. And you probably should not be looking for that capital back from them, at least for those 10 years. So this is obviously extra money that you have lying around. And if you wanted to invest in them, you can look into these areas and you can find appropriate venture capital funds that are focused on a sector that you like or an industry that you like, things like that. So you want to, understand what the hedge fund does or what the private equity company does and what kind of investments they make. And if you were interested in that, you could get in touch with them. All of them are looking for investors all the time. So even if you're new to it, they would certainly welcome and give you a discussion. Now, the one other interesting aspect of which has been developing over the last couple of years is crowdfunding. And you've probably heard of sites like Kickstarter and Indiegogo and so on and so forth. Recent regulations have become very investor friendly. So the SEC took a look at this, and now pretty much anybody can be an investor in a company by investing small amounts too, whether it's $500 or $1,000 or $2,000. And so crowdfunding is very exciting because you can put a little bit of money in 10 or 20 or 30 exciting startups, and you get a small amount of shares. Equity-based crowdfunding is going to become very popular. And so now previously you had to be an accredited investor, which means you have net worth of 1 million, not counting your home, your primary home, or income of 200K or 300K if you're a couple. Now, for all of these hedge funds, private equity, and venture capital, you need to be an accredited investor. Whereas for crowdfunding, I believe the rules have been relaxed now, and or it's going to be relaxed. And so even if you're not in this category, you can invest $2,000 and $3,000. So that's a very interesting aspect of the whole investment cycle. So this can really kickstart a whole bunch of new entrepreneurial activity. And that's really why the SEC has come out with their views. And I believe that's going to be very good for the entrepreneurial community who want to do startups. This is an excellent way to take it to the next level. So then there's the other types of investments, real estate. Now, these are not really financial assets. So real estate, obviously, timing is important. Location, 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 that's important. Nice returns if you can make your investments a little leverage. So what we mean is just your house, if it's $1 million house, you pay 200,000. And then if you can make a profit of 400,000, that's 100% return. That is a leveraged return. If you can keep doing multiple ones of these, if you can make it leveraged, obviously it can be a very good investment. Now, you have something called REITs, R-E-I-T-S, Real Estate Investment Trusts. And those are actually publicly traded. So you can look up the Wall Street Journal or Yahoo Finance and do a search on REITs, and you'll find many real estate investment trusts. And what they do is they buy up these, corner malls. They might even redevelop it. They will then collect rent from all its tenants, and whether it's a residential, whether it's a commercial, they go into all kinds of properties. So most of these strip malls and everything you see are owned by some kind of real estate investment trust, and those trusts themselves are traded on the stock exchanges. So you can actually buy some shares of those trusts if you know what you're doing, and if you know these companies. That can be a very good way to get into the real estate sector, at least in the US. I believe there are REITs in other countries as well, but in the US they've been popular for a while. Then we come to art. Art can produce fabulous returns. We know that. And the problem with art, of course, is first of all, you need a lot of money to get into art. You cannot afford to dabble in art unless you're a ultra high net worth investor for most art. So that's the section on alternative investments. We're going to look at the human element in the next section. This is really important. These are what I call the soft skills. You might have all the knowledge, you might have all the chart reading skills and everything, but if you don't focus on developing some of these softer skills, which I'm calling the human element, then it's very difficult to succeed in the investing world. So you have to take this seriously, and we'll take that up in the next section. Thanks.